Hey folks, Fractality here. Just wanted to do a quick weekly review for you as we're going into the weekend. Hope everyone had a good week. I won't be around this weekend, so my forecast might be delayed until Monday, Tuesday. But I just thought it would be helpful if I just talk about what happened this week. And yeah, let's just get into it. So this is the dollar. So what did we get? We got a Wednesday high of the week profile, but I'll explain that further in a second here. So as you can see, we continue moving higher for the past few weeks, and then as we're getting into the premium of this overall range, we did a little bit of a retracement, and I mentioned on my forecast for the week that this daily fair value gap would be an area of interest. And so something that might be useful is to keep in mind is when we were consolidating, so I'm just going to use the replay to show you what I mean. And might as well just get rid of some of this. When we were consolidating, so this was after the expansion, this was about on Monday. Okay, we were inside of a smaller range. When we were consolidating, two things could have happened. We could have either gone for the extended external high of the expansion and reject it to go down to discount, so that would be premium to discount. Or we could have gone discount and then up to premium to whatever the high was. Those are two options that could have happened, and those would have been the two scenarios we were looking out for. What we ended up getting was, in fact, the premium first, and then a rejection, and then down to the discount. So let's take a look at that rejection and what that looked like. Important to keep this level in mind, as this was if I'm not mistaken, actually it's more like keeping the high of the fair value gap in mind. So I'll just go ahead and draw it correctly. It's important to keep this level in mind because this is going to represent fair value on the retracement. This is what the market will seek if it breaks bearish. Okay, so this is what IPTA is reaching for according to ICT, right? And then of course we know that anytime price comes down and makes a low without hitting that gap whatsoever, we are engineering liquidity. So at this point, we came down here twice, and then here if you count that, so there was a lot of liquidity, a lot of stops resting here just above fair value, and now that's talking about the concept that I've been discussing of raids into stop runs into fair value, or engineering liquidity just above or below fair value gaps. Okay, so anyways, so what did we get? Well, for one, on Friday we formed a dealing range. Okay, so the dealing range, and you're just gonna have to study ICT concepts because I'm not gonna teach this stuff, but you can look it up. But the dealing range is this low to high, and then on Monday we rated it and rejected, and it looked like we could have gone for the gap, but we did not. That's fine, and that's why it's always important to get take partials and whatever. When we're this close to the level, I'm cutting it. No need to hold it. But anyway, so we rated during the London session on Tuesday, rated the dealing range high. Once that rejected on 5-minute, 15-minute, it actually did a double tap, right? So it took the high and then it took it one more time. Once that rejected, I got short, and I was participating in that trade. It was a good trade, and then I was kind of done for the day because I didn't have anything to trade off of down here, right? No key level that I liked, so no point. But anyways, we move on to Tuesday. We ended up, so this is like a decisive moment, right? From this moment forward, right, we had come all the way down here but chose not to go for the gap, and then it starts going higher. it's like, okay, well, it seems like it's bullish, but the thing is, yeah, it is bullish, but if it fails, right, like if it reads this high and fails significantly, then we're likely to go for that gap. And what it ended up doing was rating, we pressed higher twice, 2 more times. I believe this was some red news. But the key one is that reversal that occurred in, I believe this was, I don't know what news this was, sorry, but it was a key news event. We reversed, formed the reversal at the end of the day in the New York London close time, which is a common time for market reversal. And I mean like directional reversal for like, not just intraday reversal, right? But something that you should actually go study this, but if you see like the London close or New York reversal occur, look at the next day profile. It's often a sell day. Obviously, cherry picked, blah, 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 because that's exactly what happened, but it's a common thing that you'll see. So anyways, we like completely shifted, right? We took out that high, and then we really broke like the more, I guess, like intermediate structures. So now the intermediate order flow is bearish, and we have equal lows with the fair value gap. Now, something about equal lows on their own are not, in my opinion, a draw on liquidity, in the sense that you can get your bias from them, right? You need more to it. Like this structure needs to already be bearish in order to be considering those equal lows. But like if we're bullish and we haven't broken structure, then those equal lows don't matter to me, okay? And it's really important you get that in your head, because you will trip yourself up a lot, and price will be bullish, and you'll be like, oh, I want to short, but then you keep getting stopped out, and you're just wrong until it shifts structure. But anyways, always better to wait for the shift, especially like if the intermediate structure is bullish, wait for the intermediate shift to go bearish. Okay. I don't know how to turn off WhatsApp on here. I'm such a boomer. Anyways, alright, cool. So what ended up happening was on Thursday, yeah, we just did the retracement into premium here. And once this started breaking down even more, it was just such an obvious trade to go lower into that gap, okay? And then after that happened, for me, the week is done. We went premium to discount. I don't know what it's gonna do the next day. It's Friday. I'd rather just chill and be happy with what I made for the week. But that's dollar, and then you can just take all of that and apply it to euro and GU. Which I don't have prepared to go over, but I think that's enough. I want to keep this short, and I got stuff to do. So yeah, I hope this was helpful, and I hope you guys have a good weekend. Make sure you do your weekly reviews, really, in depth, everything that happened. Log the daily profile for each day. Notice how they transition to each other. Especially that New York reversal into sell day can be really nice in the right context. Like, and this is the right context for that, right? So yeah, have a good one.